everybody. This is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com, and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Hey everybody, I hope you had a nice weekend. Man, my life is busy, you know? Just doesn't always work out that I can get to a video sometimes, so sorry for missing Friday. And we've had a nice long weekend, lots going on, so let's catch up and see what is happening in the market. So let's just start off. Well, first of all, let me at least say that if you haven't joined the free channel on cryptoinfluencers.com, I would appreciate if you did that. And if you're curious about how to trade and do all of the risk management and how to manage a portfolio, or at least watch me show you how to do it, that's exactly what this is for here. And then our Wednesdays we'll be doing a live stream. The other thing is, let's see if I can just find it really quick. Kind of finding it on the fly here, but MEXC Global invited me to do a Twitter space on April 28th. This is 16 UTC, I believe is 9 a.m. Pacific. So that'd be 10 o'clock Mountain Time where I'm at in the morning. So if you want to join in and whatever, that'd be cool. All right, let's look at this crazy market. So last time we spoke, I talked about how we kind of got some bad news. Market is not doing what it's supposed to do. In a bullish market where we are finding more support and we're climbing and we're doing the things that we should have found support on the top of this line here. This was our kind of our best scenario. And we dropped below our 20. We dropped below this line. And so now we're looking for some downside. And so today we can kind of talk about how severe it should be. The cool thing is that we have a lot of support underneath us. So we could turn around at any point, but we have to be realistic about this, because when a market starts turning down, there are pretty significant, especially in Bitcoin, things can be pretty volatile. So we want to be in the best place possible. I ended up putting in a short to hedge my position right on the 20. So I had a neutral position, and what I'm expecting, this is just my own, this is obviously not financial advice or anything, but my own speculation is that we would at least drop to the 50 and find some kind of a bounce. And I'm betting we do some sort of a bull trap. So the reason I think this is that we have had a pretty strong move from 16,500. You could say that we kind of gained some footing here. So this might be really the start of the move. But if you say we started at 19,500 and we moved all the way up to 31,000, that is a monstrous move. And there is no break here. Every single low is higher than our prior. This is a teeny little pullback. I don't even know if you'd register this because we got a little bit higher high here. We bounced off the 20, broke up, and we were way up here. So having a 50% move off the bottom of this is a big move. I know in crypto, people assume that if it's not 100% or 200%, that it's not a decent move. But when you're dealing with tens of thousands of dollars under this asset, it's not going to move as fast as things used to. Moving from 3,000 to 10,000 is a whole nother ballgame. moving from 15,000 to 70,000 is massive. It takes a ton of money. There's got to be some huge drivers, and it can't be a bunch of greasy hair basement dwelling guys buying Bitcoin at the same time. It's not the same as it used to be. So this is a solid move. There's going to be lots more upside because there is plenty to go. But where we have lost our structure, we broke through resistance, found a nice place to consolidate, but continued. We have not had any pullbacks to define a level of support. Our last level of support was here, 20,165. This was a long time ago. This is March 10th. We're April 24th. It's been a month and a half of pure upside. So we have somewhere to fall, most likely. So if all of this was in one candle, if we did a candle of an entire month and a half per candle, the midpoint is the 50% mark. The 50% mark is kind of our holding zone. We really want to hold the upper half of this entire move. So this is when a lot of people would use like a Fibonacci or something like that, but not so interested in the Fibonacci. What I am interested in is this. So here's our 50% move. It's this arrow right here. And that is exactly at 24,600. Now this is an odd number, right? We just want to be on the upper half of this. So 24,600, there is a lot of reason why we will not fall that far. Number one, our 50 is here. This is only 1% below our current trading price. I think we'll get a bull trap and come back down, and we will likely lose the 50. Just because, just because we've moved up a solid 50% move with no break, we're going to come back and have some kind of a pullback. The next most like level would be the 200-week moving average, which is sitting at a negative 6%. So a 6% drop could be pretty realistic. I'd say it's very realistic. We'll most likely hit this. From a daily standpoint, this is our flip from resistance. We should find support here. This is a 10% drop from here. So if you're looking at your current portfolio and you're thinking, what would a 10% drop do to my portfolio? And it's going to wipe you out or something, I'd be reevaluating big time. I'd probably be looking for some kind of an adjustment or a hedge, even if it's temporary, to keep things going. But this coincides with about the 100. So we could bounce off the 100. But this level here is pretty major. 24.8, practically 25, is a pretty solid place where we should find support if we're in a full bull market. There is a lot of reason why we are. So I wouldn't be just giving up on Bitcoin yet. In history, we have pulled back to some major lows before we had the full run up. Right now it's the year of the chop. We could fully go sideways. So this entire map is on the table. But there is some good momentum happening. Couple things to watch. So let's head to the weekly. We have an inverse head and shoulders that started this whole move. Giant breakout of this. Well, if we were to come back to the neckline, that is at 24,300. So necklines can be support. We would just need a wick. But a wick could be as low as 25,250, and it would still flip resistance here, because this is the highest point we traded at here. So if we get an intersecting wick and we hold the 200, we could be well on our way, big time. So the 200 is huge. We never have lost the 200 on the weekly, and we fell through here, battled here, lost it, rejected, and took a big candle to climb above it. Do I think that in the very next move we will just immediately fall through it again? It would be kind of unlikely. In the history of Bitcoin, this has been such a support, and we've already done the battle. We've already fought this. when we break it, we should find it as support. That also means that we could come down to 26,000 to get that support. So there has to be something. If we go straight down here, we might start having some consolidation, and we could start cruising up. It would probably be a pretty good move, because people would probably interpret this as a cup and handle if we came down to the 200, and that would be pretty bullish. So this downturn is going to be temporary, but make no mistake, this temporary downturn is probably going to take a month. It's not going to be this short thing. And honestly, if we do get a bull trap and we come up to like 29,000 or something in here, and then we take another week to pull back, the longer it takes us to get down to these levels, the more drawn out it'll be. So we kind of want to just rip the Band-Aid off and get down here, but we still need a consolidation. We still have to have a base. We can't just have a wick down and back up, or else this is all going to look like the same move still. So there is a lot happening here, but things take time. Markets don't go super fast. But my speculation that we're going to bounce off the 50 is coming true. We got our candle closing in 20 minutes. This is not the most beautiful reversal candle I've ever seen. So we kind of have a doji. There is more support than resistance here. But I would totally expect us to move to reject again off of the 20. So I'm betting that's a move to about 29,000 from here. And this might be a decent place to hedge a position or whatnot. I was looking for a pretty major hedge up here, but this is getting a little optimistic for the shape of this chart. There is plenty of reason why this would remain resistance, just because we slipped through it. So we may not get higher than 28,500. But all of this is temporary. We have lots and lots of support below us. If you are sitting in a situation where your portfolio can handle it, you know, why would you take the risk? You know what I mean? So it would be only if you're really nervous about your position. But I do like the shape of this close. If in 20 minutes we pull up and have even a slightly green candle, or if we're completely flat, that's a pretty strong confirmation that we're at least going to have some kind of a bounce, and then we can kind of reevaluate position or whatnot. So these things are looking pretty good. We are on the 24th of April, so the monthly candle is worth looking at now. So we did not fully reach up and hit our 20. We came short. The 20 was a 32,202. So we missed it by $1,200. So too bad. I was ready to put in some good longs up in this area, but just missed them all. So just wasn't this round didn't quite go the way I wanted. But we should have some moves. This would not be a bad thing if this was a red candle. So April can be red. What would be nice is if we had, so since we broke out of the 50, and we've never been below the 50, I can give us more data, and you can just see in the history of Bitcoin, it has been support as well as the 200 week. So the 50 month has always been support, and we lost it back here. And then we've actually battled with it for quite a few months. Breaking above, it would make perfect sense for us to come back and find the 50 as support. We don't want to do that this month. We want a full candle body above. And then in May, it would be perfectly great for us to come back and hit this line. If it was a wick, or if it was short-lived, or even if the candle body made it all the way down here, we're still in a bullish situation. What we want to be is at least above the 50% mark of this candle. But obviously the entire move, if we can stay at least above that, bouncing off the 50 would make perfect sense. But this 50 is sitting at 24,500. So there's just a million reasons why it would make sense for us to come back to about 25,000. That's kind of my target, because that's where we really battled on the daily, 25,000, and then there's tons of support that are coming up. This is a bullish chart. just because we have a minor pullback, it's not the end of the world. This is literally only a 10% move. But this move has been a little bit more painful because alts never really got off the ground. So we were expecting that Bitcoin and Ethereum would move and that alts would start getting a fire under them, but they just never lifted off. So alts, this is the total market cap of alts. They are still on the weekly, we're still in the yellow zone. We had a fake out that happened here and we pulled back in. So we're not quite there. We are currently touching the 20, so there's a chance, but you can just see how the microcaps just never lifted off. After we bounced off the bottom, they've been sideways for 2 months straight. They will not always be like this though. That's why I'm pretty comfortable holding my longs. But I also have small enough positions that I can handle quite a move on alts and not be in trouble. But yeah, so the monthly on the total market cap of the alts has still not broken out. So we are still rejecting off of the 50-month on the microcaps. So there's some work to do here. The biggest alt of all is Ethereum, and it had a beautiful breakout. I think the only reason we're doing this is because of Bitcoin. The fundamentals on Ethereum are still absolutely phenomenal. I would love to see us stay up here for 6 more days, because if 6 more days we have a full candle body above our breakout line right here, then if we decided to come back and hit a wick down on, this number is 26,881. So we're 2681 below 17. So from 18.4 or 1841, we're looking only at like a $150 move. We've moved 150 like in a day. Like we've moved around quite a bit. But this structure is absolutely bullish. We just need a little bit more footing and a little more time. So this looks good. Our weekly does not look so great. We completely reversed. We did not hold this as resistance. We had a candle up and a candle down. So this is technically still in play. This line did not break out. So we're still resisting. And that's the same thing. Same thing with Ethereum as Bitcoin. There are a million places where we can find support. Support could happen here at 1762. There's likely support here, 1680. And this 1680 would match what our expectations for the monthly breakout is. Yeah, and then our 20's coming up quickly. Our 20's at 1617. So because we've been so careful coming up and we haven't gotten really overheated, we've got lots of room to run. The absolute worst case scenario is potentially 1500. Because of our 200 week and our 50 week are both right about there. On the pro channel, someone was asking if we were going to have this death cross. I think it'll be a near miss. I don't think we're going to have this death cross on Ethereum. Even if we did though, our price is above, so it doesn't even matter. We have no resistance at this down in these levels here. So this is still in the works. And Ethereum did do a bounce off of the 50. It didn't touch, but the structure of this is close enough that it'll count. But on the way down, we did not retouch 1900, which is a logical place for us to retouch. The 20 is here. So at 1943, if we're going to do any kind of a dead cat bounce this week or some kind of a bull trap, anywhere between 1950 or so, potentially a wick up to 2000, this is probably in play. And this might be a decent place to re-evaluate risk and things as well. So those are definitely happening. But yeah, this looks a lot stronger. The only way this really breaks down is if Bitcoin loses its 50. If Bitcoin has a bit of a bull trap and then it comes down and flips from green to yellow, it's going to be a brutal. Entering the yellow zone for Bitcoin at any level is going to be rough. It's not going to be the end of the world, but it really could push us down. So if we get a dead cat bounce up here and we have a bull trap up in this area, and it gives us time for our 50 to get as high as it can, we want our 50 to get as high as possible before we lose it, because when we lose it, there's a general trend on how much we can expect to lose if we go from green to yellow. The most recent situation was our 50 to our bottom was about a 15% drop. So 15% drop would be more severe, because if we did a 15% drop from our current price, that puts us at 23. So that, I mean, that could be a wick. So we could wick that low, but that'd be pretty brutal. That'd be pretty rough. That would kind of mean that we kind of missed every support level that was that was hanging out here, and we'd be on the way down. So if we can get a move up and allow our 50 to get up, so that a 15% move pulls us back to like 25 or 24.5 or something, then we'd be in a lot better shape. So we'd really want to get as much time under our belt as possible before that happens. And then I'll show you just what we've done in the past. This move from green to yellow. So this is bottom of the bear market. Oh no, excuse me. This is the COVID crash. So this is bull market. So this is not the same time frame, but from the loss of the 50 down to the bottom here was about 10%. So 10% move is about what I'm expecting on Bitcoin to pull back on this particular move. And then this one was really extreme. Like, we had gotten really, really hot. Our first move when we exited the green zone, our low was 10%. So I think this is really on the table. I'm not going to measure this because this was really kind of a different situation. I mean, I'll look at this one. This is 15% before we re-hit a green, and then we kind of exited the green into the red zone, and life got insane over here. But this was the most bullish. This was the most bullish potential moves for Bitcoin. What I think we're doing, so I mean, technically we had a short exit of the green zone, and I don't think we're doing this. I think this is not a scenario that's going to happen, but a move from here is a potential. So we could lose the 50 and really drop. This move was 15%, actually about 16%. So this is probably time frame wise and where we are in the cycle of Bitcoin. This is kind of where we are. And when we lost the 50 here, this was a 28% drop. That would be brutal, but this is after quite a move up to the upside. So we're not here yet. I'm just kind of showing you what happens when we exit the red zone or the green zone. So this is another 10%, not too significant compared to the moves up that we've seen. So here's our 50. This one dropped 18%. And then this one, we were kind of well on our way, but it was a 30% drop. A lot of these are intense, you know, but this was our most bullish moment. Like this was the biggest run up ever. Last one, 23%. And then we had our blow off top. So going from green to yellow is a huge, huge event. It is not pretty. It is generally a death sentence to the price. So we are avoiding it today. We traded below it intraday, but we're bouncing above it, which says that there is support. If we get a move up and get a bull trap and give us some time up in this area before we come back and retest it, that would be ideal. If we retest this in 7 days or 14 days, it's probably not going to hold, because if you get off this, you want to really get off. You want to be up making new highs and, you know, delaying the next touch as long as possible. And we've had a pretty good time since we got above it. This is the first touch in 42 days. So this is a pretty good move. Pretty awesome move. Most likely the next time we touch it, it'll be half this or less. And that just means the more frequency The more times you hit it at a higher frequency, that's when things break down. And it's okay for this to happen. We just need to be prepared for it, right? We need to be emotionally and position, portfolio wise, we need to be prepared for a move like that. So there are a lot of people, I've seen it on the news and different things, people crying out for a $60,000 or a $100,000 Bitcoin before the end of the year. I'm not in that camp. I don't think that's going to happen, even though I love Bitcoin and I want it to go up as much as possible. From our current price, a $60,000 Bitcoin is 120% from where we are. I don't think that's in the cards. I just don't think that's possible. And 100%, $100,000 Bitcoin at a triple from here, yeah, I just don't think so. It's just not realistic. What I think we will do, potentially we can get higher. Oh, and this is one reason why there's probably one more push before the end. Timing wise, if we measure the time from the halving backwards, there was kind of a local mid-cycle peak before the halving, and the timing of this move is kind of what I've got my eyes on. And so if I go backwards, this was 322 days. So 322 days from our mid-cycle peak to the halving. That means that from our halving, potentially 322 days, we're about a year to our halving. So we've got to really be watching out for stuff like this. Next one, we had our kind of our mid-cycle high right at this candle here. This was 245 days. So between 245 days and 322 days, we have this high, and then we kind of go for about 6 months where we're flat. This one was like 9 months. It was way, way more. So there's this high that I'm expecting. That's between, it's kind of our mid-cycle high. We just don't have enough data here. I don't know if this is it. It's 315 days. That's pretty good. It's another good data point. That says about 315, so 322, 345. Our halving is expected to be, I've got it marked out end of April. It's probably not end of April. It's probably beginning of April. I'll go from here to just check where we are. If I go back 245 days, that puts us July 31st. So does that mean there's another push to hit us at July 31st, kind of an intra-summer high? That's very likely. I think it's very likely. If I bring this back to 315, 322 to 315, that's like right in here. This is mid-May. This is half a month from now. So there is a potential that we have one more pretty decent bounce. And one of the things that supports this theory is Elliott wave. So Elliott wave is essentially this theory that things move in threes. So there's an impulse up, a small impulse back. Number two is a big impulse up, and then we have a small impulse back, and then the number three is the big one. The final of the three is sort of the top. And whatever top this is, it will likely be the local top. So the intra-cycle top could happen after whatever pullback we're having right now. So this move here is kind of the one that might be our top for about 6 months, 6 to 9 months. That's kind of what the charts are showing me. So this is a pretty significant thing that we don't want to ignore. We don't want to get blinded by the people that are shouting for 60,000 or 100,000 and all-time highs. We want to be very cautious on our next impulse to the upside. That could happen anywhere between, could be May, June, or July. That's generally the time frame when it would likely happen. But also, part of this theory is that the place you find support is at our prior resistance. So that's when I was looking at these things. But to what we did before is we pulled up on the first impulse. The pull back mirrors one of these from before. So this is how we got an inverse head and shoulders kind of showing up on some of the other time frames. So we pulled back to one of these points here, and then we pulled up. Well, where does the pullback come to? It comes back to here. So we should be touching 25,000 if Elliott wave is in play. So this could be a pullback. We just need a wick that intersects 25,250 or below, and then we could really be setting up for our next impulse, and the impulse should be pretty big. The next one is usually the most publicized, the most emotional, the most planned for. People are excited, and when we start breaking above this, that's when people start losing their minds a little bit. So we have to be very, very cautious when we break above 31,000, because we're going to get all kinds of numbers on the table, and this could be our high for a while, because Elliott wave theory says that there will be an impulse up, down, up, and whatever this ends up being is the next one. Well, the next move is an impulse all the way back to our base. So it will not find support here. It will slip through to 25. So if we hit like 37, 40, 45, and we pull all the way back and hit 25, like that'd be pretty brutal. But it's sort of a zigzag down, zigzag up, and then one more zigzag down. So this just flushes out all the emotions out of the market and kind of resets us, repositions us for a brand new impulse. The good news is that usually you by doing this, you set yourself up for a brand new high. So honestly, the less overexcited we get, the more minor the pullback could be, and it'll really set us up really nice for either early next year or later this year or something like that. But we kind of want to be planning these things in advance. We don't want to just be blindly expecting us all to go straight into the bull market mania phase, because we're not even to the halving yet. We've got a lot of stuff to do before then. This is the year of the chop, and people are going to get chopped up if they get too emotional. So I've hedged a little bit because I wanted to capture this swing, this pullback, and I really think we're going to at least hit 25 at some point. And but I think there's one last dead cat bounce in the books. So our day was beautiful. We just closed this 2 minutes ago, 1 minute ago. Bounce off the 50. It is likely, since we were so steep, and then finally we're starting to see some sideways, that our downward momentum is out. We're gonna see whatever bull trap we see, and then we'll probably come back and find 25,000 in the next month or so. It's probably a month. So hopefully that helps set expectations for what we will, likely experience. But this is just from my experience. I can't tell the future. I don't know if this is going to play out perfectly like this, but we just have to look at it at 1,000 different angles and see how just be kind of ready for the most scenarios, and prepare in case something completely unexpected happens. We don't want to be so overextended that we can't handle anything that comes. But anyway, those are my thoughts. Hopefully that catches us up for the last few days of missing videos. And I should be good this week, so I'll be back tomorrow. All right, see you guys. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.